I'm sure you have.
Jack, you're good.
Can I have everyone take their seats, please? The meeting is getting ready to begin. Thank you.
All right, Jackie, we're ready for you, Jackie.
Great, thanks, Fran. Good morning, everyone. Call the June 1st, 2023 meeting to order. This is a public meeting of the Philadelphia Board of Pensions and Retirement, and it's being conducted in person in the board's conference room at the board's offices on the 16th floor of 2 Penn Center. Pursuant to section 21-1503 of the Philadelphia Code, electronic recordings of this meeting will be made through Microsoft Teams conference technology and by an audio recording. An electronic recording will be made available to the public online on the board's website without charge within 10 days. Please note that you consent to such recording by attending, participating, or speaking at such meeting. I would also like to note for the record that I am participating remotely today. Could I ask our vice chair of the board to indicate that she can hear me clearly?
Yes, I can.
Thank you, Carol. Our first order of business is a motion to adopt the rules of order that the board has approved and used for its in-person public meetings that are electronically recorded. The purpose is to ensure that accurate and complete audio and audiovisual recordings of the meeting occur to comply with the code requirements. The motion to adopt our new procedures for today's meeting has been made and seconded. Is there any discussion on this pending motion? Hearing none, we'll go to the roll. Brian? Charles? Leontine? Vanessa? Sherilyn?
Approved.
Roosevelt?
Approve.
Paul?
Approve.
And Carol.
Approved.
Motion carries unanimously. Item 2, a motion to approve the minutes from our April meeting was made and properly seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian? Charles?
Same.
Leontine? Vanessa?
Approved.
Sherilyn?
Approved.
Roosevelt?
Approve.
Paul?
Approve.
And Carol.
Approved.
Motion carries unanimously. Item 3, a motion to approve 120 pension applications and 68 withdrawal applications.
Jackie, that was an extension on the minutes of the motion on the minutes. Charles abstained, so it was 701. Can you correct that?
Sure. We'll go back to item 1, and there was one noted abstention, so the motion carried 7-0 with one noted abstention. Apologies, and if I can ask the members to just speak loudly, it is a little hard to hear.
Yeah, Jackie, that was item 2, right? That was item 2 where Charles abstained the minutes, right? Because he was not here at the last meeting.
Item 2, thank you, Brian. Item 3, a motion to approve the 120 pension applications, the 68 withdrawal applications is made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian?
Approve.
Charles?
Approve.
Leontine?
Approved.
Vanessa?
Approved.
Sherilyn?
Approved.
Roosevelt?
Approve.
Paul?
Approve.
And Carol.
Approved.
The motion carries unanimously. That moves us into section 4. Case 4A, a motion to approve the service-connected disability benefits for Timothy McDevitt was made and seconded. Any discussion on this item? Hearing none, go to the roll. Brian?
Approve.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Approve.
Paul,
I approve.
and Carol.
Approve.
The motion was 4-4. As the chair, I will vote to deny to break the tie, and so the motion fails 4-5. 4B, a motion to approve the service-connected disability benefits for Charles Winrow was made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Approve.
Paul,
Approve.
and Carol.
Approve.
There was a tie 4-4. As the chair, I'll vote to deny, so the motion fails 4-5. 4C, motion to approve the service-connected disability benefits for San Yursi Frisbee was made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Approve.
Leontine, Vanessa, Sherilyn,
Approve.
Paul,
Is coming.
on 4C, Paul,
4C, yes. I approve.
Roosevelt,
Approve.
and Carol.
Approve.
The motion carries unanimously. For D, a motion to approve the service-connected disability benefits for Timothy Hegarty was made and seconded. Any discussion on this item? Go to the roll. Brian,
Approve.
Charles,
Approve.
Leontine, Vanessa,
Approve.
Sherilyn,
Approve.
Roosevelt,
Approve.
Paul,
I approve.
and Carol.
Approve.
Motion carries unanimously. For E, a motion to approve the service-connected disability benefits for April Holmes was made and seconded. Any discussion on this item? Brian,
I approve.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Approve.
Paul,
I approve.
and Carol. Okay, there was a tie 4-4. As the chair, I will vote to deny to break the tie, and the motion for 4E fails 4-5. For F, a motion to approve the service-connected disability benefits for Arthur Lee was made and seconded. Any discussion on this item? Brian,
I approve.
Charles,
Approve.
Leontine,
Approve.
Vanessa,
Approve.
Sherilyn,
Approve.
Roosevelt,
Approve.
Paul,
I approve.
and Carol.
Approve.
Motion carries unanimously. 4G, a motion to approve the service-connected disability benefits for Amanda Pote was made and seconded. Any discussion on this item? Brian,
I approve.
Charles,
Approve.
Leontine,
Approve.
Vanessa,
Approve.
Sherilyn,
Approve.
Roosevelt,
Approve.
Paul,
I approve.
and Carol.
Approve.
Motion carries unanimously. For H, a motion to approve the service-connected disability benefits for Elena Rodriguez was made and seconded. Any discussion? Hearing none, we'll move to the roll. Brian,
I approve.
I'm sorry, Brian.
I approve. I'm sorry.
Thank you. Charles,
Approve.
Leontine,
Approve.
Vanessa,
Approve.
Sherilyn,
Approved.
Roosevelt,
Approve.
Paul,
Approve.
and Carol.
Approve.
Motion carries unanimously. For I, a motion to approve the service-connected disability benefits for Kathleen Skolin was made and seconded. Any discussion? Hearing none, we'll go to the roll. Brian,
I'll abstain.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Approve.
Paul,
Approve.
Carol. Okay. The vote was 3-4 with 1 noted abstention, so the motion fails. For J, a motion to approve the service-connected disability benefits for Nancy Butler was made and seconded. Any discussion on this item? Move to the roll. Brian,
I abstain. I'm sorry. I abstain.
you abstain. Charles,
Deny.
Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Abstain.
Paul,
Abstain.
Carol.
Abstain.
Abstain, Carol.
Abstain. I'm sorry.
Thank you. The motion fails 0-4 with 4 noted abstentions. For K, a motion to approve the service-connected disability benefits for Tion Davis was made and seconded. Any discussion on this item? We'll move to the roll. Brian,
I abstain.
Leontine, Oh.
Charles.
I'm sorry, Charles.
Deny.
Thank you. Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Abstain.
Paul,
Abstain.
Carol.
Abstain.
Motion fails 0-4 with 4 noted abstentions. For L, motion to approve the service-connected disability benefits for Elvis Francis was made and seconded. Any discussion on this item? We'll move to the roll. Brian,
I abstain.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Abstain.
Paul,
Abstain.
and Carol.
Abstain.
The motion fails 0-4 with 4 noted abstentions. For M, a motion to approve the service-connected disability benefits for Kabir Richardson was made and seconded. Any discussion? Hearing none, we'll go to the roll. Brian, Leontine, I'm sorry, Charles.
Deny.
Thank you. Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Approve.
Paul,
I approve.
Carol.
Approve.
The motion was 4-4. As the chair, I'll vote to break the tie. I'll vote to deny, and so the motion fails 4-5. For N, a motion to approve the service-connected disability benefits for Clarence Waits was made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian,
I abstain.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Denied.
Sherilyn,
Denied.
Roosevelt,
Abstain.
Paul,
I abstain.
Carol.
Abstain.
The motion fails 0-4 with 4 noted abstentions. For O, a motion to approve the service-connected disability benefits for Denise McCabe was made and seconded. Any discussion? Hearing none. Brian,
I abstain.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Abstain.
Paul,
I abstain.
Carol.
Abstain.
The motion fails 0-4 with 4 noted abstentions. 4P, motion to approve the service-connected disability benefits for Terry Jenkins was made and seconded. Any discussion? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Approve.
Leontine,
Approve.
Vanessa,
Approve.
Sherilyn,
Approve.
Roosevelt,
Approve.
Paul,
I approve.
Carol.
Approve.
Motion carries unanimously. Moves us to section 5. 5A, a motion to approve the service-connected disability benefits beyond the 1-year deadline for Donna Duncan was made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Approve.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
I approve.
Paul,
I approve.
Carol.
Approve.
A motion carries 5-3. 5B, a motion to approve the service-connected disability benefits beyond the 1-year deadline for Stephen Heller was made and seconded. Is there any discussion on this item? I'll recognize Carol.
Yes, I would like to send this to a hearing panel.
Okay, so there was an alternate motion to send case 5B to a hearing panel. Is there a second?
I'll second.
Okay, recognize Brian's second. A motion to send case 5B to a hearing panel was made and properly seconded. Is there any discussion on the revised motion? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Approve.
Leontine,
Approve.
Vanessa,
Approve.
Sherilyn,
Approve.
Roosevelt,
Approve.
Paul,
I approve.
and Carol.
Approve.
The revised motion carries unanimously. That moves us to 6. 6A, a motion to approve the administrative application for service-connected death benefits regarding Charles Kilgus, the deceased, was made and seconded. Any discussion on this item?
Very quickly, Jackie, on this, just want to note, the workers' comp judge already opined that this is work-related, and went to appeal, and there was one on appeal, so I just want to make note of that.
Okay. Thank you, Brian. Is there any other discussion on 6A? Hearing none, we'll move to the roll. Brian,
I approve.
Charles,
Approve.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Approve.
Paul,
I approve.
Carol.
Approve.
Motion carries 5-3. Moves us into old business, section 7. Case 7A, a motion to approve the application for service-connected disability benefits for Joan Rudzinski was made and seconded. Any discussion on this item? Hearing none, we'll go to the roll. Brian,
Deny.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Abstain.
Paul,
I abstain.
and Carol.
Deny.
I'm sorry, Carol.
Deny.
Thank you. The motion fails 0-6 with two noted abstentions. 7B, a motion to approve the application for service-connected disability benefits for Barbara Tiano Webb was made and seconded. Any discussion on this item? We'll move to the roll. Brian,
I approve.
Charles,
Approve.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Approve.
Paul,
I approve.
Carol.
Approve.
Motion carries 5-3. Case 7C, a motion to approve the application to rescind drop enrollment for Niyama Abdullah was made and seconded. Any discussion on this item? Okay, we'll move to the roll. Brian,
Deny.
Charles,
Deny.
Leontine,
Deny.
Vanessa,
Deny.
Sherilyn,
Deny.
Roosevelt,
Deny.
Paul,
Deny.
Carol.
Deny.
Motion fails 0-8. Moves us into new business and the executive director's report.
Good morning, everyone. Just briefly, I don't have much today. The PAF is on schedule for June payroll. With, as usual, the quadros have to be reviewed individually, so they will come in sometime after June. That's all on schedule. And just want to thank Shamika, Bill, Stacy, the internal staff working with the OIT payroll folks on this. Doing a really good job. You'll see something in the back of your binder. I think the solicitor Diana mentioned this at the last meeting. It's the Mass Financial Services Conference, which is in Philadelphia at the Lowe's Hotel. It is during the period of time of our next board meeting. However, since it is at Lowe's, I think Diana mentioned if you wanted to attend, we can just go to the board meeting and walk down the street and go to the conference. So, yeah, I just wanted to, I don't know if anybody has a motion for anyone who wants to go to that. Diana highly recommended it. I know, Diana, I don't know if you want to say anything about that.
Well, good morning, everybody. I would highly recommend attending. Carol, we attended last time, and I think Andrea, who's not here today, she also attended it with us. It was a great and really rewarding experience, and it's not just for, well, we went to the one that was focused on women, but there were a lot of men there who were supportive of empowering women, and it's particular with financial empowerment. It's a really great group of people as well. And I know at some of these conferences, you may feel like you're getting bombarded with people trying to do sales pitches, and that was not the case here. It was really a good sense of community. And so I highly recommend it. If you have any more questions on it, please feel free to reach out to Carol or to me about it.
So if anyone has a motion.
I'll make a motion to approve anyone to attend that conference. I second it.
Motion regarding the NASP conference this summer was made and seconded. Any discussion? Hearing none, we'll go to the roll. Brian,
I approve.
Charles,
Approve.
Leontine, Vanessa, Sherilyn, Roosevelt,
Approve.
Paul,
I approve.
Carol. Motion carries unanimously.
And that was all I had today.
Thanks, Fran. Is there any other new business?
Yes, I'm just making a quick announcement. The photo that you have is actually Marsha Green Jones' mother-in-law passed away last week, which is why she's not in attendance. So I photocopied the announcement card. The services are tomorrow, viewing from 9 to 11, and the service starts at 11. So there's information on the card here if anyone wants. Thank you.
Thank you, Leontine, and our condolences to Marcia and her family.
Fran, can we send her food basket flowers for the board?
Yeah, we can, if you want to arrange that for Elizabeth, we can do that.
Yes, can you do that, please? Thank you.
Thank you, Carol. Any other new business? Okay, that moves us to the litigation summary update.
We have a number of cases in town police, and that's all.
Thank you, Ellen. A motion to adjourn has been made and seconded, and hearing no objections, motion carries unanimously, and we'll move into the deferred compensation plan portion of our meeting.
Is it? I think so, like, I think.
I don't know, I even, it don't fit in mine for the last 10 years. So I ain't been on
I think, Valerie and
They did used to do it.
Okay, looks like we've got everyone in their seats. So item 1 is a motion to approve our minutes from April. Motion was made and properly seconded. Any discussion? Hearing none, we'll go to the,
Jack.
They're not ready yet. You better get ready for
Jackie, can you restart?
Yeah, get ready.
okay, are we ready to begin?
Okay, Jackie, you ready?
I'm ready.
Okay. All right.
Fran, are we ready to go?
I believe we are ready.
I'm sorry, I couldn't hear you.
Yes, I believe we
Okay.
are ready.
Okay, thank you. Item 1 is a motion to approve the minutes from our April meeting. Motion was made and properly seconded. Any discussion on that motion? Hearing none, we'll go to the roll. Diana? Brian? Leontine? Vanessa? Nick?
Approve.
Roosevelt?
Approve.
Paul?
Approve.
And Carol? Okay, motion carries unanimously, and that moves us into item 2, the plan update and activity report.
Good morning.
Good morning.
Good morning.
As of April 30th, deferred compensation plan ending balance was $1,703,963,720.44. About $14.3 million from a difference in terms of increase from the month of March. Total participant count is 25,205, 137 more than the month of March. Actively deferring is 19,585, 114 more folks that are actively contributing. New enrollments for April was 208. If you look at year to date, it's about 756. Just want to thank Brad and his team for the great work that they're doing with new employee orientation, because when we compare it to the previous year around the same time, it's 338 more new enrollments that the team has brought in. Inactive participant is at 5,620. That's 23 more. Fran, you had asked us to analyze the breakdown of the inactive count of those employees that are terminated or those employees that are still employed but have stopped their contributions. I want to thank Bill Rubin for helping us with that analysis. Based on the analysis, about 80% of that count of 5,620 is those participants that have terminated, but they've decided to keep their account balance with the City of Philadelphia plan. About 20%, or about 1,200 participants are still employed but have stopped their contributions. We are planning to reach out or send an email to have them restart or just consider sitting down with retirement specialists.
Yeah, it's two things, and that part of it, of course, to encourage those who stop contributing, maybe become a little more active. But the other part, the 80% part, is that people like what is being offered and like the service and decide to remain within the deferred comp plan even though they're not employed. So I think that's a compliment to the board and to Nationwide. So it's a good number.
But can they do that? Can they remain in the pay inactive?
Yep, they can,
Wow.
yeah, as long as they,
Even if they be city employees?
Yep. they can. Yeah. And one of the things that, to just reconfirm what Fran had mentioned, is this is a very cost-effective plan,
Mhm.
and therefore folks decide to leave their account balance and take out distributions as needed.
Okay.
It's interesting because the state house just passed a bill for employee savings, mandatory employee savings. Chris and I were reviewing it along with Jack. It's requiring employers with 5 or more employees, whether they're a nonprofit or private corporation, to automatically enroll people into a retirement savings plan. And it would be run by the state treasurer. But the fees on the plan, at a minimum, not for the underlying funds, but for the administrative costs, were 75 basis points. So not the underlying funds, just the administrative cost. You know, our administrative cost is much, much lower than that. So the reason I bring it up is not to criticize that plan, because it's good that private employers would be required to do that for the employees. However, to show, similar to other quasi-governmental agencies that decided to join our deferred comp plan and this type of plan, our fees are incredibly competitive with any other plan out there. So that I was not going to bring up that state plan because it's not really applicable to us, although it could be in the future if it's adopted statewide and then possibly on a local level, because I think the possible incoming mayor was a big proponent of providing retirement security for private employees, and asked whether this fund could run something like that. So it's something that we're keeping an eye on just for educational purposes. So, but yeah, the cost is, we are very competitive. So.
And, you know, 2 agencies that have joined due to the fact that this is, the board trustees and staff have, you know, built a really excellent plan. One of them is Philadelphia Parking Authority that joined last year. There are 522 participants, 12 new enrollments. So every month we report out new folks that are joining this plan. And then Philadelphia Housing Development Corporation, there are 48 participants, 1 enrolled in the month of April. In the 401A as of April 30th, the ending balance is $2,338,336.39. 942 participants, that's 2 less than the month of March. Call volumes, there were about 3,657 phone calls received in the month of April. That is a drop of about 11 from the previous month. Online, we keep tracking how many folks are setting up their online account. That number continues to go up. There's now about 18,890 participants that have set up an online account. This is where they can leverage the tools and resources. And that's about 75% of those participants that have an account balance have set up a web profile. Regarding percentage contribution, the plan offers percentage options, and currently, as of April, there's 17 participants that are utilizing the percentage contribution. That's an increase of about 109 more since the month of March. The after-tax contribution is the Roth 457, and as of April, there's 5,595 participants. That's an increase of 171 more participants, with total plan assets at 37.9 million. When you look at the penetration of the Roth, we provide you the age demographic breakdown. It's very popular in the age 30 to 39 and 40 to 49 age group. We also want to thank the board trustees as well as staff for the opportunity to offer the virtual courtyard. This is a 3D interactive experience. The virtual courtyard link was open for 60 days from April till the end of May. And what we have noticed is, as of April 30th, 538 Employees have visited the virtual courtyard. Nationwide has proactively sent out emails to remind folks to engage with the courtyard experience, and over 2,244 activities those participants engage with. So when we report out in May, we'll give you the whole comprehensive analysis of how many people actually visited the courtyard and engaged with this 3D interactive tool. I'm happy to answer any questions. If not, I'm going to pass it on to Brad to talk about the service activity report. Okay.
Thank you, Gina. Good morning, everyone. So for the month of April, the local office conducted 273 individual one-on-one consultations with participants, resulting in 126 enrollments for the month. 27 group workshops with total attendees of 923. Very good month for attendees to the group events and workshops. Real quick, that was boosted by the 2 pension retirement seminars that were offered in April. Thank you to Fran and Shamika for putting those on. We had a lot of good questions and follow-up from those sessions. 23 of the consultations used the My Interactive Retirement Planner for the month. With that, we have a quick update from Jeff regarding a recent meeting that was held with staff. I do believe the board has a little 2-page handout on it. Jeff?
No, thank you, Brad. Thank you, everybody. Just the piece that Brad's referring to has a cover page talking about our participant engagement program. As we discussed that in relationship and concerns that may have been there around data privacy. And there's been changes in our program that shifted in February of 2023. Sorry.
You know what? It isn't. They're behind tab 5.
So this right here?
No.
No. Oh, that's not good. That's good. Never mind.
All right. Well, the good news is there's more to come. This includes a preview of coming attractions in the sense that we've had recent conversations around the changes with our PEP program. Oh, absolutely.
Can you hear me, Jackie?
Yes.
Normally I get accused of not being unable to be heard, so I was trying not to move through the room. But no, there was a recent meeting we had with staff regarding our participant engagement program. As a marketing campaign, the right message at the right time, that was using data analytics to help generate the marketing campaigns towards your participants. We are partnering with Merkle. In the past, there have been concerns from some plan sponsors, and I believe it's fair to say, including here with the city of Philadelphia, around that data exchange with Merkle. Happy to tell you that in February of 23, that data is now all housed in Nationwide's own databases on our secure servers. So we're now solely responsible for that data security, and that data is no longer going out. So with those changes in programs, we're hoping to be able to further the conversation. This was just more to preview that future conversation, let you know about those changes more widely with the program. As that's a key cornerstone, if you will, to the campaigns and our efforts from a marketing perspective. To reaching employees across the city to help drive their retirement readiness. So just looking forward to that future conversation. Unless there's any questions, that was really it for the update.
Great. Thank you, Jeff, Brad, and Bina. Any questions for Nationwide? Okay. That moves us into item 3, the first quarter investment performance report.
Thanks, Jackie. Good morning. First 2 pages of, or pages 2 and 3 rather, of staff report just review the total plan assets as of the end of March. One quick note, a couple of folks brought this up or discussed this before. It's interesting to note for the 457 plan, the most popular fund remains the guaranteed fund, although the percentages obviously have dropped significantly from the peak down to about 41%. Admittedly, not a lot of money in the 401k yet, but you can see already that's only the 3rd most popular choice. So perhaps younger employees or folks in the Plan 10, Plan 16 cohort. With that hybrid pension, looking to diversify a little bit out of the guarantee fund. I think that's something to just keep an eye on moving forward. In terms of the overall mutual fund performance, the key takeaways are on page 4. I would point out that in several of the cases, even where we had funds in the 3rd or 4th quartile, you still saw outperformance on an absolute basis. Just as an example, the mid-cap value product from MFS over a 3-year period only ranked in the 3rd quartile, still outperformed on an absolute basis by about 1.5%. Similar from Goldman Sachs, small cap value. So I just put that out there to say that have to look at multiple data points sometimes, not just the percentile rankings, but how the funds are doing on an absolute basis. We're recommending the following as staff, and this is summarized on page 4. Either at the June 22nd or the July 26th meeting, we're going to bring a recommendation to add a Russell 1000 value index or dividend fund. That would complement on a passive basis the recently added growth option that the board added. We believe that Harbor should remain on watch. We note that performance was very solid over the first 3 months of the year, but we will be ready to recommend a replacement if that does not continue in a positive direction. Likewise, Mass Mutual, they're showing much improved performance over 1 and 3 years, but should remain on watch. American Fund Euro Pacific, that they should remain on watch. They outperformed in this reporting period over all of the listed benchmarks. Interestingly, if you just go back to December, that was actually completely flipped. They had underperformed in all reporting periods, and that's why we're not ready to recommend taking them off watch. And then lastly, Fidelity Real Estate, similar, keep a close eye on them. We did send out the information that the board asked about regarding how folks would have done if we had stayed with the prior real estate option, T. Rowe Price. It's kind of a mixed bag. Had the board stayed with T. Rowe Price, there would have been outperformance in 2 of the reporting periods, underperformance in 1, and then over the longest reporting period, 5 years, it would have been exactly even. So we'll continue to track that, but long story short, there wouldn't have been a significant impact to participants in either direction. Happy to take questions on any of that or any of other funds the board wanted to discuss.
Do you have a sense or estimate as to how long this watch is going to be for these particular funds?
It really depends on how, there's a few factors, Diana, how much they underperform, and then I don't want to say necessarily how long, but when you have something like the American Fund Euro Pacific, I mean, that literally flipped on its head in 90 days, roughly. As a staff, we're probably more likely to view that with some concern, given the volatility, than folks who kind of are showing steadier performance. So it's really, I'm not trying to dodge the question, but it really is fund and market, specific. I think some of these funds, for example, if Mass Mutual continues to improve, I would expect them to come off watch soon. Harbor underperformed for a while, so I would think that it would take us a little bit longer to be comfortable taking them off watch. Fidelity, real estate's a tough space generally now, depending on what sectors you're in. I would expect them to stay on watch perhaps a little bit longer. So again, not to be redundant, but I think it's very fund and market, specific.
Chris, just maybe one consideration also is that for example, with the Harbor Fund, with 7.85%, third most volume participation fund that we have. I think you want to try a little more slowly to create some bulk among the participants.
That makes sense.
I think that's fair.
Thank
Fair.
you.
And then the Vanguard money market update at the end of the first quarter, agenda item 4. There was $1,920 and change of total income through the end of March. The balance of the account, $180,139.32. As you know, this is, account collects revenue and interest to pay expenses of the plan. We've generally, or the board rather, has generally done a pro rata distribution, and we've gotten to roughly $1 million. So we're obviously stuck in some ways away from that. No expenses during the quarter, although we do have one outstanding invoice that we actually just paid. That was for a prior year plan audit and to CLA, and that was for $27,000. So that will be reflected in the next, in the second quarter. That's all I have, Jackie. For the next item is nationwide.
Thanks, Chris. Any questions on 3 or 4 before we move into the last item in deferred comp?
Hopefully everybody has the annual report for 2022. I'll start on page 4 and page 5, just to provide an executive summary of the year 2022. When you look at the deferred compensation plan, the ending balance December 31st, 2022 was $1,617,9,401.39. That's 10% less than the previous year in 2021. Total participants is 24,913. That's 415 more participants than the previous year. So we saw an increase there. Actively deferring is 19,356. That increased by 245 more participants actively deferring at the end of 2022. New enrollments is 1,591. We saw new enrollments significantly increase by 32%. Part of it was due to the work that Brad and the team does, but more importantly, there was also Philadelphia Parking Authority folks joining the plan. So we increased new enrollments by 32%, or almost 390 more new enrollments received. Inactive, 5,557. That increased by 3%, or 170 more from the previous year. In the 401A plan, as of the December 31st, 2022, the ending balance was $2,231,181.07. That's 8% more over the year before, and 954 participants, which is about 8.8% increase. Workshops, virtual meetings, one-on-one continued. Just want to, in full disclosure, we did have reduced staffing last year in the early years, and then we had the full team come on board around August. So you'll see a decrease in overall consultations, webinars, etc. We conducted 1,092 virtual one-on-one consultations. The local service team did 181 educational webinars on series of topics, and there were about 3,518 employees that attended the group workshops and presentations. In terms of campaign outreach, we did do the Ready to Retire. This is reaching out via email or even reaching out via phone calls. The campaign is designed to reach out to employees that are nearing retirement, to encourage them to meet with the retirement specialist, review their asset allocation, or consider deferring their unused leave or balance or roll over their drop dollars. But it's more, we continue to do this throughout every year we do this campaign, Ready to Retire. In terms of digital enhancements, the My Interactive Retirement Planner tool, which allows employees or participants to evaluate whether they're on track towards their retirement goals. So the tool populates Social Security, your pension, as well as deferred compensation plan and outside resources that you have, balances. So what it does is it gives you an overall picture. One of the things that we're continuing to do in enhancing the MERP tool is now the participant can actually view, based on their current allocation, what the rate of return is. So rather than defaulting them to a 6% rate of return, they actually get to see. So then 100% fixed, they get to see their real rate of return. The other thing that the MERP tool allows participants to view is a detailed income analysis. So it shows how the assets would be distributed over time and where the shortfalls and surpluses might exist, considering inflation as well as taxes. So what it does is it empowers participants with more informed information around where they need to be and then engaging conversations with the specialists. On the next page, the call volume in 2022, we received 37,896 phone calls. That's an increase of 9.4% over the previous year. Year to date, there were 18,425 participants that have set up a web profile. So that's about 74% of those participants that have account balances. In terms of percentage option in 2022, 1,392 participants elected a percentage contribution. That's an increase of 377 more participants than the previous year. Roth contributions, which is the after-tax contribution in 2022, 5,061 participants, an increase of 1,029 participants that leveraged the Roth, with total plan assets at 30.8 million. As we shared earlier, 2022 was an exciting year for us because Philadelphia Parking Authority joined the City of Philadelphia Deferred Compensation Plan. And starting as of October, the team did pre-transition workshops where we did about 22 different workshops with 345 participants that attended. We did these workshops throughout the location to make sure that they were aware of the assets rolled from Empower, who was their previous record keeper, to Nationwide. So thank you so much to the board trustees for advocating on behalf of us, as well as encouraging folks to join the plan.
Dean, if I could just quickly comment on the percentage option in the Roth 457B, spearheaded by Brian and then Carol, are two elected accounting experts. They're both very good tools that were added to the participants' retirement toolbox. They give them the ability to go to their financial planners or themselves and decide whether or not they want to take that, tax-free sort of option on the Roth 457 or on the percentage option, have that automatic increase in the event that they get a pay raise or a pay increase. So, and I would want to thank the entire board for having the foresight to add these. Not many plans add it in the Roth 457 relatively new. I mean, it's becoming more common, not the Roth IRA, but the Roth 457. So it was a lot of foresight that, Brian, you initially brought it up, Carol also, and then the support of the board. So there are two really good tools. I'm glad to see that that's growing. So it's a good move by the board.
Still a lot of room for growth there.
It continues to grow.
Let's keep pushing.
Continues to grow.
One other thing I wanted to bring up with the parking authority, PHDC that you mentioned, and we'll get into this at some other point, but I did talk to Brian and Carol and producer and Paul about this, actually Rob too. The additional revenue that's coming from these additional participants, we fully expect that additional revenue would be a consideration for revisiting the guaranteed rate. And that'll be coming soon. I don't want to get into it now, but that discussion should be coming soon, especially given what's going on with interest rates. Jeff, you're on notice.
Hold it down.
On page 7, just wanted to highlight the team that's dedicated to servicing the city of Philadelphia. We have the full team, that works really hard and are committed to providing high level of service. On page 9, just a general overview of the 457 plan. I had shared earlier the active and inactive. When you look at the total participant count, it's 415 more than the previous year. We're comparing it to 2021 versus 2022. Total contributions, positive cash flow at 139.9 million. That's 3% more than the previous year. Again, the rollovers and transfer-ins includes the 6.7 million that was brought in from Empower Nationwide. In terms of total distributions, the total distributions are 114.4 million or 28.7% increase. Here, we continue to do retiree outreach, but dollars do flow out of the plan, either through when they're terminating, but also transferring out when they're nearing retirement. We've provided details of all of this breakdown in the following pages. So if you have any questions around the details of this information, please let me know. If not, I'm going to go to page 35 just to highlight the 401A overview. Yep.
It's a great number, by the way. But there's always room for improvement, right? We have a way to target, maybe it's what Jeff talked about earlier, whether it's not contributing, non-contributors, folks who have not signed up at all. Because we know initially when folks join, the first employee, their income is a little lower. It tend to rise over time the way the pay scale works. And generally, they can afford it better once they realize they're on stable ground with this employee. Okay. We have a way to target those people specifically today, or would that tool help with that? That's kind of a two-sided question.
So 2 parts, I'll address the first part. Yes, we can target the folks that we know they're currently employed, but have stopped their contribution. So that's one of the proactive initiatives that we would take, just to make sure people restart, remind them to review their accounts, but just to encourage them to enroll. The second part is what Jeff and staff have reviewed, which is the participant engagement program for folks, but this is targeted messages customized to those individuals, and based on their retirement journey phase, we are reaching out to them to encourage and engage them to enroll and increase their contributions, etc. The other value of having a percentage option is as salaries increase, the percentage option allows more deferrals to be contributed into the deferred compensation plan. But yes.
Tina, I may add on
yes.
that.
Go ahead, no, go ahead, let me maybe ask the question. Go ahead.
So with the participant engagement program, there's lots we can do with laser focused targeting, as you're speaking to, right, reaching that demographic. But part of it is data. So we know who's on our systems now, because then we have access to their, whether it's an address, email, or physical address. But folks that have not engaged the plan at all, right, we don't necessarily have that data. So if there's an opportunity to partner there to get data and build across, then we would
get them when they come in, right? You have an opportunity to get them when they come in. So it's worth the time, right? Some unions do well with that, others don't do as well with that. But again, to reach back 2 or 3 years later, I'd like to see if we can find a way to get you that information, to reach out to these employees and say, you're missing out on a valuable tool that you will need in order to retire properly. Pension won't do it. Pension, the no COLA, pension doesn't do it. So if there's a way, I don't know, and I don't know if we need to get into it today, but get it on the radar and have some discussions. Get them the data for the folks who do not join the plan, so we can continue to try to reach out to these folks.
I think we can do that through working with HR, right? Working with Marsh HR, working with the new Merkle, the new non-Merkle tool, I call it, and the technology that we have here. No, I think we can do that, and that you and Billy would be participants. We could do that.
Okay, 'cause I will tell you, in my union, when we hold our seminars for these folks, they will sit down before they leave the room and they will either sign up their contribution, you get that attention. And they listen and they realize, oh, yeah, I'm missing something, I need to get on board. I think you'll see success.
We welcome that opportunity, in a future discussion as far as how to get that data and build greater resources. It would be.
Brad, the work that you do on the HR new employee sessions, you hit that hard, hit that hard, the importance of that.
Yeah, absolutely. And Brian, this is related, but not directly on point. I meant to ask Brad about it and then just did a minute ago. So on the page where it shows the, I think it's 10, the folks who are not currently contributing, that includes folks who aren't eligible to contribute. So per Brad, we can break this down in exact percentage, but Brad's estimate is only about 1,200 of the folks who are in the not currently contributing are actually eligible. The rest are retired. They're, as Bina was talking about earlier, can stay in the plan, but aren't eligible. So that's now that doesn't include folks who haven't signed up, period. That's a separate, but of the folks who are already in the plan, only about 1,200 are eligible.
So that's even good to know, that
Yeah.
that's 1,200 of them, because that gives us probably multiple more options for outreach.
Yes.
Because it's a lesser, more workable number. So Carol, I know because I think you're one of the main people on that subcommittee for the deferred comp. If we want to work the next, 30 to 60 days on some materials and then have a subcommittee and maybe Brad, Chris, whoever can present to the subcommittee, then we can come up with a concrete plan going forward. We bring it back to the board, and we can do it that way if you want.
Yeah, we were going to recommend getting together a subcommittee anyway to discuss the participant engagement, the related issues, the non-Merkle and stuff, because we didn't want to move forward with any of that without speaking to the subcommittee and the board, so we could do that.
So that's
Combine
already
that
two
with your-
things on the agenda.
Yeah,
then
so we could
everything else
combine
we
that.
go from there, yeah.
June, July, yeah.
I think it'd also be interesting to see what the age groups are of those 1,200s, and those 1,200 folks, and sort of like what are the motivating factors. I think just as we're dealing with different generations now working with each other, there's different ideas of what work security looks like. There's I know, yeah, I think we have a lot of folks that are not, they should be invested in what their future's gonna look like and how they're gonna pay for it, but I think it's just important to know that age groups, and I think we just need to make sure what our message is really hitting home on that and making a connection to the importance of this investment.
Since you spoke about age group, I'll just highlight page 14. This is the plan demographic of where that $1.6 billion, as you can see, we broke it down, the age group and the participants balance. Almost 51.49% is in the age group of 60 and over. 27% is in the age group of 50-59, and then it drops down, as you can see, 40 to 49 age group is 13.46, but it just gives you an approximate idea of where those dollars are positioned by age group. If there are no, we've broken down a lot of details in the report, but if there are no questions for me, I'm going to go right into the 401A plan overview.
Another question on page 14. Did you also have the number of participants by age?
On page 14?
Yeah. Maybe the prison balance, assets,
Yeah.
account balance.
Yes.
So you have the number of participants, because that can,
We would have to provide that.
because the lower end
Yeah.
salaries are probably lower too, so that's probably part of what's driving it.
We can follow up to
Great.
provide that breakdown. Any other questions on the 457 breakdown? If not, we'll go right into the 401 plan overview, which is on page 35. There were 954 participants at the end of 2022, at 77 more than the previous year. In terms of total contributions, we received $621,015, and then total distribution is $83,837. The forfeiture account balance as of 2022 is $14,727. Happy to answer any questions. If not, I'm going to pass it on to Brad to talk about the participants' experience.
So what's the corporate your account balance?
I'm sorry, if it's not vested, it goes, the dollars go into the forfeiture account balance.
So for folks in Plan 10, Plan 16, if they receive a city contribution, that vests it for 5 years of service. If they leave the city before those 5 years, that money goes back to the city. So it goes into the forfeiture account because it's not their money if they don't have 5 years of service. Just the city contribution. Their contribution is theirs from day one.
Brad or Peter, when I was looking, I pointed out to Nick, I looked at the chart up above and I saw that the average account balance for 50 to 59 says 132. And it's 60 and over.
Back to 14.
Yeah, 16 and over says 67. And I thought it was a little curious that even though they have a lot more plan assets than the average. Then I looked at the chart at the bottom and it seems to have a different number. Which one is correct?
The bottom is the average account balance, which should match the line 3 on page 14.
Right, so they're a little different. Right.
What age group you talking
On the
about?
bottom chart, 16 over is showing 132. On the top, it's showing 67.
This should be 74.
74.
Looks like it's over one.
Yeah, it went,
One,
yeah, it
looks
it looks like one
moved over
moved
one.
over
Yeah.
one.
Right. Okay. So the top is correct?
Yes. The top is correct. This one, I mean, I think that what happened is on 60, yeah, it should, the bottom, on page 15 is correct.
The bottom has to be right, yeah.
67 is for the overall.
Yeah.
Yeah, because it doesn't make sense that 60
Correct.
would be half the
Yeah.
amount.
Yeah.
It's not how
I'm not a mathematician, but.
That's where
That's where it went off, yeah.
Nick is.
That's right, you left out the 74, 796.
Yep.
Yeah.
Really good. Charles, I like Nick sitting here, you can check it out.
Page 14 needs to know how.
We'll update that, sorry.
Good auditing.
See, remember that, Charles. Self-audit.
Any other questions on the report?
So, I'm gonna be very brief, just kind of the service activity report for 2022, you see on page 29. Just the activity of the local office team. As Peter mentioned earlier, you know, for a good part of last year, we did have some staffing problem issues. So the activity is a bit lower than previous years. However, we have, just to put it in perspective in terms of the turnaround, for 2022, we had 3,500 attendees to our webinars. The last 2 months of this year, March and April, we had 2,000 for those 2 months. So just to put it in perspective of kind of the turnaround with the new, with the staff and the team. So there's 1,092 consults with 800 enrollments. And on page 30, you see a list of the key events that we had throughout the year, listing a lot of new employee orientations, some of our educational seminars, Social Security, the Police Academy visits, paramedics, DC 33, some visits to the water department, our Investing 101 seminars. That is the service activity.
for local office for 2022. I'll be happy to answer any questions. Thank you so much.
Thank you.
Thank you very much. A great report, Peter. Thank you.
Thank you so much.
No, great job. Thank you so much. You're good. So Frank, I don't know if, Frank, I don't know about you, this, because remember I asked you about, so we talked about, the committee, educational session for the trustees on Plan 16. We still think
Yeah, we
about
can do
it?
that whenever you want to do it. Tell me if you want to do it July, August, September, you want to do it, wherever you want to do it. The idea is so everyone understands, Carol had a conversation.
Me and Brian had a
And it had to do with what Brian mentioned today, what Carol's been mentioning concerning the importance of people participating in Plan 16, but for the newer trustees to understand Plan 16, you know, the nuts and bolts, the benefit aspect, the investment aspect, how they work together. So we'll do an education seminar on Plan 16 and any other benefits related issues that you think we would want to talk about. So feel free to email me over the course of the next week or so, and then maybe we'll set it up over the course of the next month or so. Okay,
Okay, thank you.
sound good? All right, thanks, Carol.
Great. Thank you. Thanks, Fran and Carol. And thank you to the trustees for your patience with the hybrid format. A motion to adjourn our deferred comp portion of the meeting has been made and seconded. Any discussion? Hearing none, I will turn it to the finance director to move into the investment committee.
And Jim told me I have to sit down there, so.
Yeah.
Sure, yeah, I think I'll come back at 10:50.
Yeah, okay, okay.
Yeah, I saw that. Yes. So I think that was a good trick. Must be longer than- Yeah. It's very good.
Oh, yeah.
But that's what happened, like, nobody wanted to do it.
No, go ahead. Yeah. You ready?
No, we got it. We got it. It's all right.
I'd like to call the investment committee in session. Everyone's ready. First item is approval of minutes from May, or a motion.
So moved.
Second. Moving properly second. I will pull the roll. I'm gonna go to a different order because,
Ooh.
oh, yeah, let's go. The order I'm seeing people. Roosevelt? Approve. Brian?
I approve.
Paul?
I approve.
Brian,
Diana?
every night.
I approve.
Carol?
Approve.
Bianchi?
Approve.
Vanessa?
Approve.
And Nick? Approve. Great, we're done. That one. On we go. The local brokers report.
Rob, sorry, did we do the minutes?
That's
What did you work?
You just
Yes,
did.
we did.
We just did. But I went out of order, Fran, I called the, Roland was really confused. I was last.
So as the board knows, the funds, equity and fixed income managers are encouraged on an aspirational basis to direct annually 35% of their trades to minority-owned and local firms. You can see in the first quarter of the year, strong start by the firms. On the equity side, 41% of the trades being directed to qualifying firms. I will note Capital Group, who's a recent manager, we talked about them last month, starting to ramp their program up. They were at 0% for the first couple months.
And so we think they'll get there.
They're getting going. You can see they're now at 16%. Drumline was the highest for the quarter at 99%. On the fixed income side, 32%. I will note MetLife in the mid-teens. I do have a meeting set up with them next week to go over a couple things that is on my list. Think that continues to be primarily result of one account. I think they have a couple accounts with us. I think one they have stronger numbers than the other, but I will keep the board updated on that in the next report.
Do you have any questions on that? Okay.
Sure, just a couple of notes before we get started. You should have got an email yesterday. The estimates will come out today so that they, for the month of May, so they capture the full period. A few things that we're keeping an eye on in terms of what's going on in the broader market. Obviously, we've had, or at least we think, the debt ceiling resolved yesterday. Still has to make it through the Senate. Interestingly, though, one of the things that has started to be talked about coming out of that is now you'll have there's some articles I can send it out later, but basically now, assuming the debt ceiling is resolved by this weekend, the Federal Reserve or the Treasury Department, is going to have to flood the market with treasuries because they're so close to the to the cap. So Macquarie and some other firms estimated up to $1 trillion of treasuries could hit the market in a really short period of time. That could have a pronounced impact on interest rates, particularly if there isn't the appetite, there aren't enough buyers at the rates that are initially set. Short positions on the 10-year treasury are at their highest level since 2000, just as a data point as to what some folks are expecting to happen.
What will that mean for us? And maybe nothing is a short term correct itself.
You would think that over time it should correct itself. Obviously, in the short term, you could see some volatility. You'll see managers trying to take advantage of that. There's other folks who don't think that it'll have as big of a deal. They think the appetite will be there, but the fact that the short positions are so high will indicate more people think it will have an impact than not. Federal Reserve, it's kind of been all over the place. I think a couple weeks ago, the odds of a hike in June were at 29%. I think earlier this week, it spiked to 60%. Now it looks like they're going to pause in June and then kind of reserve the right to raise rates later. It'll be really interesting to see how the market reacts to that.
You'll be surprised no matter what.
Yeah, but it doesn't, I don't know that the market's gonna, Waku may speak more to this in his remarks, but it doesn't, in my mind, show a lot of conviction, kind of straddling the line. Well, we think we need to raise rates, but we're just not gonna do it right now. It's kind of a mixed message. I don't know how well the market will respond to that. Economically, big news this week was the numbers out of China were really, really poor. A lot of folks are thinking that that shows that there's more structural weakness, a lot more problems than maybe people first thought. Recession indicators here are a really mixed bag. You have consumers and folks, I think only 18% of folks polled think the economy's in a really good place, but at the same time, you have record-breaking travel going on. I think Memorial Day was like the busiest travel day in some insane period of time. So you have really mixed and conflicting messages on the economy and whether or not we're in a recession. Debt ceiling behind us now. I think we have to think about whether there'll be a government shutdown in October. That would be the budget or later this year. That's when the budget would be due, and I think the current continuing resolution would run out. So that'll kind of be the next thing to pay attention to on the federal level, and then banking issues. You could see, because of the amount of treasuries being issued, you could see folks taking more money out of banks if they're like the interest rates being provided by the treasuries, which could cause some, depending on where the money comes from, regional banks, smaller banks, causing some more stress there. There's also the underlying real estate stress, particularly in the office space, and what banks kind of hold the most trouble in real estate. Where they need to roll the debt over at these higher interest rates. So a lot to keep an eye on. Do you want to add an overall market commentary?
Yeah, I would just say super high level. To Chris's point, we expect that to be a lot of contradictory information in the marketplace. On the one hand, the Fed, the Treasury, I should say, is issuing more debt. That has the potential for interest rates to go down, but at the shorter end of the curve, yields are still high. So an inversion of the yield curve may be more of a focus and more of a discussion. That can become a self-fulfilling prophecy because an inverted yield curve is predictive towards an economic slowdown. The magnitude of the slowdown is behavioral, right? If people cut back on spending significantly more, in their minds thinking there's a recession, we could be in a deeper recession. So that's one thing to juggle with. The other things we think about where the market's doing pretty well in spite of the volatility. We're looking at the market, i.e. the S&P 500, it's positive year to date. But then you peel back the onion and it's not your stocks that have good fundamentals. So when you think about fundamentals, you think about the financial statements, the cash flows, the revenue, the income. All those indicators are really out of the window when we look at the stocks that are doing well. It's about 6 stocks in the S&P 500 that are contributing to 70 or is it 90% of the gains, but it's a disproportionate amount of the gains, which takes us to why is that happening? Rates are high, there's uncertainty. The Fed is not really giving us a clear signal, but yet certain stocks are doing really well in spite of fundamentals not being strong. So it's a really long way of saying buckle up because the direction the market's going has no rhyme or reason, more so than in the past. And at some point, we will have a landing, whether it's a soft landing or a hard landing. That will be determined by, I guess, how aggressive or zealous the Fed has been in terms of its interest rate hikes. If it's been an overshoot, we'll probably have more pronounced slowdown. If they did get it about right, slowdown should be more of a blip. So more to come as it relates to this portfolio. I like to say we think about the building blocks we have. The building blocks with fixed income, we're not doing anything crazy with fixed income. It's investment grade. We're not, reaching for so much yield within our fixed income allocation. So that should give us some comfort. If we think about volatility within the fixed income market, we think about equities. Again, we have index exposure, but we also have active exposure. So the hope would be if the indexes are pulling back, the active managers, the active bets should hopefully be holding their own. The equity allocation that focuses on downside protection, better known as global low vol, that is in the portfolio to also help during volatile periods of the market such as now. So as we think about the building blocks, look, there's risk in the market. We cannot avoid taking risk because we have a target rate of return that's healthy. But the key thing for us as fiduciaries is to remember, if the market does go down, do we have building blocks that should protect us? And the answer is yes. And then when the market rebounds, do we have building blocks that should participate in rebound? And the answer is yes. So definitely, probably a wild summer ahead. But again, we've fared pretty well in the last couple of wild rounds in the market. So we wouldn't expect, significantly different outcomes this time around.
And the landing seems as being pushed back.
Yes.
So absolutely, that's also affecting.
Yeah, the crazy thing is, we were poised for a landing, and then COVID came and took the blame away from the tech companies and leverage and low interest rates. So that reckoning is still not happened. We've seen a little bit of that reckoning through the bank failures. So that's part of whenever there's a bubble, something will burst within that bubble, and there's a ripple effect. So we've seen that with the regional banks. The question is, with the regional banks at this point, does it become something that's contained? So JP Morgan taking over First Republic, Signature Bank, and so on. Are these the end of the story, or do we have more ripples that we are expecting?
And I guess for all those reasons, we still won't be able to predict if there is a recession, if there is a reckoning, how bad it's going to be either, right? It's going to be as bad as it was in 2008.
Correct. And the other thing I'll mention here is, in the old days, I was laughing with Kristen, like, we can now say old days and feel old, right? But in the old days, when there was I'm speaking for myself. But when there was a recession, usually the market would also show a lot of downward pressure. What we're seeing today is, okay, even if there's a recession and the real economy suddenly wages go down, the market could rally for whatever reason, and it could be based off, a big bet that's being made by traders. It could be that the part of the economy that's feeling the most pain is actually insulated from, the broader economy. So the strange thing is, a recession may not necessarily mean our portfolio is hurt, even though the headline and people that we know may be, juggling some of their own challenges. So it definitely makes it that much more interesting. And, you go back in time, let's say 20 years, there wasn't that much information, right? So people could only get into so much trouble with their portfolios and trading. Now, with all the information available, people are going to trade. The trading may exacerbate any type of movement up or down in the market, and you're juggling that along with the real effect of a slowdown and jobs being cut and so on.
And you're trading on what they can spend in 5 years as opposed to what's happening now.
Yes, exactly. So the benefits of market efficiency are lower fees, but the drawback of market efficiency is everyone has an opinion, and that opinion will get reflected in the stock price, whether it's right or wrong. And it becomes harder to really figure out, okay, this is a good stock, but is it a good investment at this point in time?
Quaker, when you talk about slowdown, you're clearly referring to the economy. And we know that Wall Street doesn't always reflect Main Street.
Absolutely.
Do you think that the market right now is overvalued?
Quick answer is
The
yes.
equity market.
Yeah, quick answer is yes. We basically went from a period like 2022 where there was a cooling off, returns were in the negative double digits. Price to earnings ratios were, not as high as a result of that. We fast forward now, and you're looking at growth PE ratios to 30 or so. So there's still an overvaluation, which would point to that either there's a new normal and there's a reset where these PE ratios just continue to climb, which doesn't seem realistic, or there's a reset where things have to come down again before they shoot back up.
The earnings would have to be incredible to keep up with the current PE.
Absolutely. Absolutely.
Are there any particular managers that we're monitoring or concerned about?
No, so within the, well, I will speak for myself and speak for Moncat. I would say, with respect to the portfolio, there are no surprises to report this particular month. The behavior of the managers is in line with expectations. The fixed income composite managers are performing in line with expectations. No one's really pushing the envelope. On the equity side, the active managers we have complementing the passive. We're not looking at like significant amounts of tracking error that we have to over-explain. I would say, examples would be on the international side. If you look at Capital Group and Causeway, good examples of two managers year to date, both doing pretty nice jobs. On the domestic side, we continue to see the active managers holding up well. So with everything set around uncertainty, we always go back to, okay, diversification, and the portfolio is adequately diversified with both active and passive. In our opinion, the alternative side of the portfolio, that's perhaps going to be less of a supercharge of returns for us. We're seeing valuations come down there. So I would say maybe on the alternative side, as 2Q numbers come in the coming quarters, we'll get a sense of public versus private, whether discount rates, premiums are adequately positioned. But again, for now, nothing to really report with respect to the managers. We looked at Brandywine last month. The global involved managers are doing what they need to be doing, and everything within the various composites, again, is performing in line with expectations.
I was reading an article yesterday about alternative investments, and I think the headline was that alternatives aren't as alternative as they used to be, or a little more mainstream. Yes. Kind of the point. Does that give you pause or concern that maybe it would be more difficult to find that return as it without it being more of a niche market? It becomes more widely followed, will create more efficiencies in the market, similar to an index, let's say.
Yeah, I would say.
It might be off base, but that's the question.
Yeah, on the one hand, I would say expected returns may come down a little bit over the long term, right? Anytime there's more efficiency or more players within the market, you think about alpha as this finite set of returns that people are going after, and you have to slice up the pie amongst more players, right? If there's more players, I would say that we expect alpha to come down a little bit, but the one saving grace on the alternative side, particularly for us as an institutional investor, is leading towards either the managers that, I don't want to use the word monopolize, it's not the right word, but it's very deal-based, it's very network-driven. And if you as an institutional investor do have access to those names, you still have the opportunity to call first dibs on the really good opportunities. So that's one expectation there. The other thing is, when we think about investing and what makes for a sound portfolio, whether it's traditional investments, whether it's alternative investments, I think like the Warren Buffett or the Munger approach of if it's a model that you can replicate, if it's something you can understand, if the cash flows something that can be projected with a good degree of accuracy, you end up saying, okay, even though this is an alternative, we're invested in a more developed segment, the alternative. So small to middle market buyout continues to be an area that will be robust and resilient. Private credit, we're having private credit discussions presently. The regional banking, fallouts, the blowups, that will actually help over the intermediate term private credit. So the areas that we're playing in, I continue to think that we are adequately diversified there. If it were a hedge fund discussion, that's a much different conversation because again, the market volatility, the market efficiency continues to work against the liquid alternative space, but the private alternatives continue to be compelling in our opinion. Even with the premiums coming down a little bit, still very, very compelling.
Thanks. That's good. Thank you.
Anything else on the performance?
Be the communications director, because they're very common with all the bad
The press conference, you wouldn't see Mark.
You would not. No, you would not. All this bad news, you're going, I was thinking nothing. It sounds so nice.
I didn't want to use names, but yeah.
Sound like you're on tape, Brian.
No, right.
Brian, I'm not saying anything.
That brings us to the investment stack.
Just a couple things real quickly before securities lending. We are continuing to keep the board updated as we did yesterday, investing in our key money, very slowly, very prudently. After the June 19th investment, we have about 206 million left of what we discussed with the board to still invest for the rest of the quarter. Also, I believe a few of you met her, but we have a new senior investment officer, Mariana Vasilova. She comes with significant experience, PA service, private, family offices, wealth offices, spending a lot of time on private equity and alternative asset classes. So I just want to welcome her. Securities lending, $143,058 for the month. For the quarter, 539,560 and 52.47 million since inception. No significant changes in diverse and local AUM month over month. 56+% combined, just under 50% for MWP managers, and a little over 9% for local and surrounding towns. And then the upcoming board meetings, June 22nd, correction to the next meeting that was sent out July 26th, and August 25th.
Any new business for investment committee?
June 22nd is the meeting, right?
Yeah, this was 26th.
July.
July 26th.
Any new business? Any old business? Then the meeting, the public secretary are adjourned. Should we have to call the roll on that, or we just adjourn?
You can adjourn since you didn't hear any objections.
Okay, great. So then that takes us to the full board. Is there a motion to ratify the actions taken by the investment committee? Second? Second. Been moved properly seconded. I will call the roll. Isabel, approved. Brian. Paul, approved. Diana.
Approved.
Nick. Approved. Vanessa.
Approved.
Nancy. Approved. Carol, I switched the order on. Yeah.
You're like the market, Rob.
Any new business? Old business? Moved properly seconded. Adjourn. Any objections? We are adjourned. Thank you all very much.
Thank you.
Thank you.
Good, Jack.
Thanks, Jackie.
Thank you, Miss Dunn.
Thank you. Take care.